All right, what's going on, ladies and gentlemen? This is day number 2 of the 7-day boot camp. Tonight, we're going to get into some chart mastery. So, day number 1, we did speak a lot about brokers. We talked about how to set up brokerages, the basics of Trade Locker, things about what broker you should choose, how to set it up, how to connect it, how to get things in order. So, that was the very beginning of it. And now, what we're going to dive into in this 3-day part series is we're going to be pretty much focusing and analyzing the charts, especially with TradingView, because there's some things that a lot of people don't understand about TradingView, or there's some things that they do. So today, day 1, I really want to emphasize the basics of the charts, understanding the candlesticks and what they really are, doing some very basic trend analysis, the training your eyes. Because the one thing about trading, which people don't want to talk about a lot, is the fact that it does require a lot of repetition. Like, it's just like anything in life that we learn. How did you ask yourself a question? How do you know really what your name is? Think about that for a second. How do you actually know what your name is? Well, because your parents told you your name was over and over and over again. So you heard it. Then what did your parents do? They taught you how to write your name. So then you can visually see your name, right? You can write it and write it and write it. So now, not only did you see it, not only did you hear it, now you see your name and you physically are writing down your name. What you're doing for your body, you're making a connection and implanting in your head the knowledge that this is my name. And then you had evidence in the form of a birth certificate, in the form of a driver's license, in the form of other forms of identification that this name really is your name. Like right now, I can't convince you that your name is John. Why? Because for years upon years upon years upon years, conditioning yourself to know what your name is and then compiling evidence that this is proof of what your name is, you now can 100% be confident when someone asks you, what is your name? You could say it with confidence. Think about trading in that same aspect. In your beginning journey of trading, especially when it comes to the charts, the only way you get better at trading is to actually do the thing of trading. So if you want to get better at marking up the charts, you need to continue to see them. Like, you can't really hear the charts, but you can hear audiobooks about trading. You can see the charts, and you can practice with your hands drawing patterns. Because not only could that help you, it allows you to build that muscle to mind connection. So when it's time for you to enter in the market and you're learning to recognize patterns, you're practicing your strategy, you're figuring out support and resistance and all those different various techniques, not only that it becomes now second nature to the point where you can get so good that you don't even have to see a chart for you to be able to execute a trade because you're that knowledgeable about the skill. And that's where that higher level of mastery comes in. But it all starts right here with the very beginning basics. So we went over yesterday, like we said, we went over the brokers and stuff like that, which was awesome. I'm pulling up TradingView at the moment. We're going to dive into TradingView and let's begin our very basic introductory season, or I would say Zoom call today of trading. So I always recommend to everybody, if you're starting out on TradingView, go ahead and open yourself up a demo account. I would say go ahead and sign up an account. It's free. And I honestly just say to do that just because it's just going to allot you the opportunity to save your markups. And I know for the free version on TradingView, I know a lot of it is just it's free, but at the same time, you might not get all the charts and stuff like that, but that's perfectly fine because that's just what it is. So we're going to use gold, one of the pairs that I currently trade on. And this for the entire boot camp, we're going to be focusing on gold pretty heavy just as an opportunity to mark up charts. Because here's the thing. Everything that happens here is the same thing that happens anywhere, whether it's the NASDAQ, whether you guys trade NAS, whether you trade the Dow Jones, US 30, the dollar, SPX. Let's say you trade different futures, right? If you trade different future stocks, like you got US oil, you got different Forex pairs, cryptocurrencies. The art of marking up a chart is pretty the same no matter how you look at it. I just like to use gold because that's where I'm the most profitable with this thing. So let's go over TradingView. Let's go over some things that are on this chart that you guys can definitely utilize and learn about. So in the top left-hand corner, guys, this is always going to be your time frames. Okay, so your time frames is how long these rectangle thingies take to form, right? Why did I call them rectangle thingies? They're called candlesticks. But let's just use shapes for example. Now, to understand time frames a little bit more, you need to understand candlesticks as well. So a good way for you guys to understand a candlestick is like this. I'll say like the advanced version of it. The advanced version of what a candlestick really means, it's the visual representation of price manipulation over a period of time. Pretty much all these rectangles or candlesticks are showing you is the movement of price over a period of time. It's telling you who is moving what money, where is it going, who's determining price. A good way for you can understand a candlestick is something like this as well. Let's say you go to a sneaker store, okay? And by the time the sneaker store opens at the beginning of the day, let's do Friday the 16th of August. Friday the August 16th. Let's say this candlestick opened at, and we're going to go over the anatomy of candlestick as well. But let's say, for example, here, the price of this candlestick or the price of the snoo store for a brand new pair of Jordans starts off for the day at $2,456. So the moment that the Foot Locker or shoe store opens, a pair of Jordans costs $2,456 for every pair of Jordan. Now, by the end of the store day, which will be at the top of this candlestick, at the end of the day, the ending price for the Jordans on at that shoe store are now almost up $50 whole, $2,506. So guys, these candlesticks are representing when price is fluctuating up and down, just like how when the store opened up and the sneakers were only $2,400, and now when the store closes, they're now $2,500. That's an example of what this looks like in the market, right? It doesn't matter what you pick. You can pick, let's pick a crypto. Let's say it's for Bitcoin, right? For example, yesterday, Monday the 19th, the price of one Bitcoin was $58,000. And then by the end of that day, it cost $59,000. But the way that you know that the price of these things is thanks to the candlesticks. If you guys didn't have candlesticks on these charts, you wouldn't really know the price of what certain assets are. But the gratefulness of technology and the ability to read a candlestick, I want you guys to basically understand a candlestick. It's just showing you where price is going. What are the buyers and the sellers arguing about? Who's in control, right? Are the buyers in control or are the sellers in control? And each one of these candlesticks here will adjust based on the time frame that you allot to view this candlestick. So in the time frame section here, you guys can see you have down to the minute, 1, 2, 3, 5, 10, 15, 30, 45 hour, all the way up to 12 months. You even have some ranges, but for the sake of, a lot of times you guys are trading for anybody. Well, the most of no one's really going to go higher than 12 months. It's a year-to-year basis. If you do a year-to-year, like, yeah, the year-to-year is kind of cool. But at the end of the day, like that takes a long time. And then it's also if you're truly like swing trading, like really swing trading, you're trying to hold things for 5 to 10 years, then there should be no reason why you're on a 12-month chart or a yearly chart, unless you are looking to truly swing a trade for years. So this might be very, very beneficial for you if you are a stock trader. For example, if you're building a stock portfolio and you want to determine what your stock portfolio looks in the next 5 years, a yearly chart makes sense. Right? But for the sake of us who are day traders, one of my favorite time frames is the hour. Okay? Hour time frame is the best. And what is the hour time frame telling you? That means that for each one of these candlesticks that are on this chart, it took it an hour to open and be created. So for example, this candlestick that's currently forming at the moment opened, it's going to be closing in 34 minutes and 1 second. Okay, that's what this means. That it means it opens up and closes at the hour of every hour. So as you guys are utilizing strategy, which we'll talk to you guys about that on Wednesday. But when you guys are diving into different strategies and stuff like that, you guys can understand that with these candlesticks, they're operating within different time frames. And so now that's what the time frames are. But let's say, for example, you're trading and you really like a certain time frame and you don't want to flip it. The cool thing about the charts, guys, is you have the opportunity to favorite stuff. Just like on the boot camp from day one, where I told you guys to take the time to really set yourself up. This is another opportunity really to set yourself up. Like if you're a scalper, to find the best time frames that you like to scalp on and favorite them. If you're more of an intraday trader, find a time frame you like to intraday in. Or if you're a true day trader, swing trader, find what daily time frame you really want to like execute on. And then favorite it, because the cool thing about it is once you favorite a certain time frame that you guys like, it's going to show up in the top left-hand corner right here as your favorites. So for me, I like the 5, 15, 30 hour, and the 4. It's really it for me, especially when I'm trading gold. I don't really need to see a lot of levels past that. All right, so I hope that makes sense. Now, when we move a little bit more to the top panel here on TradingView, a couple things you guys are going to see. Number one, you're going to see the different kinds of charts that you guys can create. So for today, we will be showing you guys the line chart, but this is an opportunity for you guys to mess around and see what kind of candlesticks that you guys like to look on the chart. Once again, every candlestick means the same thing. They all are just representations. They're just all visual representations of price manipulation over a period of time, right? That's all a candlestick is. So it doesn't matter which candlestick you guys try to decide or how you want to have your candlesticks in order. They're all the same. But a moment when you start changing your charts up, there's different things that you might have to come up with. But for most people, they usually intertwine between the candle and the line chart. Okay. Of course, you have your indicators over here. So if you guys are utilizing different indicators and stuff like that for your strategy that you're learning, I'm a purely naked guy. I don't use indicators. So I like to do naked trading. I don't like to use like EMAs and stuff like that. But I know there's a lot of people who are successful in that realm. Find what's successful for you and stick to it. You stick with it. Me, I always say I like naked trading better, way better than any indicator. It's just because purely naked trading allows for less, what I would say, noise on a chart. One of the things is that even though we as humans are so powerful and our eyes are very good to receptive to certain things, our brains can only receive and handle certain amount of information a day. So the last thing you guys need to be doing is, especially as a beginner trader, you're working your 9-to-5 job, you're dealing with your family, you might have a girlfriend, you might have a boyfriend, you're still trying to go to church, you're still trying to be social, you're still trying to do all these different things, or even yourself, you're trying to lock in, you're in monk mode, whatever that's called, whatever that thing is for you, 75 hard, whatever you're trying to do. I encourage people to have less clutter on your chart. Make it easy for your eyes to figure out patterns and to figure out rhythms. The more cluttered your chart is, I truthfully believe it's a little bit harder for you to find it. But there are people who love the stuff that's on their chart, and that's fine. But I just like to keep my charts nice and clean and easy, just so I can have a nice clean slate to look into, even after a super busy day of just life, So this is where really your top panel is really favorable. Cool thing about your left panel. So your left panel is pretty much where all the magic happens. So your left panel, guys, are truly your tools and your stuff. So at the very top of your tool panel, of course, you have your different cursors, how you want to, click on the chart, erase markups, dots, crosses, whatever. Then right below it, guys, these are very big for trend lines. So if you are a trend line trader with utilizing futures, if you're a trend line trader, whether you're using Trend Trap, which I'm going to be teaching you guys later on, if you guys are more into the smart money ideals, right? And you want to have horizontal rays, you want to have vertical lines, you want to have, rays and trend lines. This is a good way to, you guys can find those tools here. And something else as well, favorite them, same kind of deal. And the cool thing about trading, you guys, it gives you shortcuts. So there's a way for you guys to, if you guys read, there's shortcuts on your keyboard and how you're able to flip through your tools pretty well. I'm going to be honest, in my 6 years of trading, I've never used a shortcut. I've always just used my 2 hands or mouse. Keep it easy, right? And then, of course, I favorite it. And the cool thing about the favorites, once you start favoriting certain tools, you're going to utilize that. A lot of them are right down here at the bottom of your, they're at the bottom, right here on the bottom of your panel. And then they're kind of your favorites. So you don't have to click over here and try to find it. Save the ones that you like. All right. The tool right below that there is your Fibonacci tool. So for all my Fibs people out there, if you guys like Fibonacci's, everything like that is going to be here. If you guys are more on the harmonic side, harmonics and Elliott waves, this is going to be a great tool for you guys to practice your harmonics and your Elliott waves. If you're more into risk management, you're trying to figure out your entries and exit points, how much you're risking, how much you're rewarding, you're going to find the projection tool, which is the 1, 2, 3, 4 down, and you're going to be able to favorite long position and short position. You can do price range, date range. There's a lot of different things you can do, but I utilize long and short position. One of the most popular 2 tools. They're both really, really good, depending on how you use them, but it's up to you. It's how you use them. Now you have your brushes. So this is more if you guys want to just mark off notes, but this is very, very good for marking off higher highs and higher lows in the market. This is also really good for you guys to mark off levels of support and resistance on here. So there's, and then also as well, if you need an arrow to pretty much, let's say you're teaching somebody the charts, you having the arrow tool is very, very vital. You can utilize that as well. Then you have your text. So annotation, right? So as most traders do, a lot of times that most traders will mark up the chart and they'll leave a note for themselves here. Hey, wait for this to happen, or wait for this to break, or wait for this to break. In the game of, in the game that you guys are going to be utilizing in trading for sure, is what you guys want an opportunity to pay attention to is that the notes is not just for the chart. It's for you to not only, it's to remind yourself what you're looking for in a certain setup. Because once again, what I said earlier previously, you have life going on, you got things happening, and it can get stressful. You might become forgetful. So the best thing that you can do to not be just as forgetful or you miss a setup, use these text and notes tools to allow yourself to leave yourself things to look for. Because the cool thing about it is when you're on the TradingView app and you're on the go and you're not on your laptop, your notes are saved. So when you pull a TradingView chart on your phone, when you are out and about, guess what happens? You have your notes placed on the chart, so you don't have to remark up everything. All right. And then, a couple other tools that I use. I don't really use these symbol tools here. They're good, but I don't really use them. Measure tool I kind of use this depending on if I'm looking at risk to reward for a little bit. The zoom in tool is perfect. Zoom in and zoom out. You can just focalize on different sections. The way you want to zoom in is you want to go in and click. So you want to click the tool. Zoom tool here. You want to click, hold, and drag. Click, hold, and drag. And then the zoom tool will make your screen fill up what you just zoomed in on. All right. And then you have, your also different tools here, which I really don't use, y'all. I really don't use these tools here. I don't see a purpose of them. But as you guys can see, I have my favorites down here. My long position tool, trend lines, horizontal line, horizontal ray, brush, rectangle, ellipses, vertical lines, short position, my path, arrow, price label, and a text box, and a cursor. Right, because those are the most frequently used tools that you guys can utilize on a daily basis. So whatever tools you guys like to utilize, especially when you're marking up charts, and if you're a beginner, just go ahead and save yourself the energy and favorite some stuff. Right, favorite the stuff. Just make your life easy. So moving on the rest of the chart, you guys kind of understand this watch list over here on the right. Everybody pretty much understands the watch list. This is your opportunity, where you can trade, go through different instruments and stuff like that, whether it's for stocks, whether it's for crypto, whether it's for Forex. And same thing here, which is really, really cool. If you wanted to go to like favorites and stuff like that, you can go ahead and flag certain things on here. If you want to get rid of something in this panel, you can just go ahead and slide your cursor over to the end here, and you can find the trash can. So you could just go ahead and just get rid of it. So something for me, I pretty much trade everything on here. What is this? Euro, JPY. This should be UJ. This should be EU. Yep. Cool. And don't forget, you guys can drag this stuff out. I think it's pretty cool. And the cool thing I like about this as well is that they have this thing at the bottom here where it has all the different sentiments and stuff like that. I personally don't care what the sentiment is, just because sometimes sentiment doesn't mean the market, technical analysis does, and then fundamentals is the excuse. We'll talk about that another day in the bootcamp. So far, this is just the basic apparatus of the charts. Like I said, once again, a candlestick is the visual representation of price manipulation over a period of time. It is these candlesticks will always change based off of the time frame that you are utilizing it. And that's going to be your biggest adjustment, right? So one last thing I definitely want to explain to you guys as well, something that you got to pay attention to. These charts, okay, so TradingView itself, in most charts in general, they only focus on a time zone called UTC. It's called the Universal Time Coordinate. Okay, so when you guys look up the Universal Time Coordinate, just give you guys a little bit of history lesson. Okay, so UTC, okay, when you Google up UTC, I didn't want to do that. So UTC. A lot of the TradingView charts are based off of the coordinated universal time or universal coordinated time, however you want to say it. But a lot of these, like it says right here, the principal time standard that underlies civil times on Earth. Coordinated Universal Time, or UTC, is the primary time standard globally used to regulate clocks and time. It establishes a reference for the current time, forming all the basis for civil and times and time zones. Now, if you guys didn't know that the UTC, the Coordinated Universal Time, is actually located right in line with the prime meridian. In the prime meridian, directly crosses Greenwich, UK, in the United Kingdom. So if you guys didn't know, that's why the UK, that's why London session is so volatile for a lot of forex traders, for a lot of stock traders. London session is very, very volatile is because the prime meridian is cutting right through the UK. And so a lot of people in the UK get the opportunity to trade the New York session. They have the opportunity to trade London session. They get the opportunity to turn certain things because they're up and awake at certain times. And so what you have to do your research on is you have to figure out what time in UTC time is most aligned with you. So for me, I live in the East Coast. I'm here in Central Standard Time in Texas. So with that being said, I want to go down to the bottom on my chart here, and I want to make sure that the time zone that my chart is sitting in is aligned with where I live. So there's London right there. Then you have this city, you have Dublin, you have Budapest, you have Oslo. So I think there's Dubai right there. There's Bangkok, China. My people in Africa, you have Johannesburg, right? Those are, location in Africa, right? So you have, I think, Moscow's right here as well. Nairobi, great example. Qatar, you have a lot of, so there's a lot of opportunities for you guys. Just find and if I butchered anybody, directly, I apologize for that, but just spend the time. Go on here, make sure that your chart is in the time zone that it allows you, because something that you guys are going to realize in your trading journey is that when you decide to start back testing a strategy, you want to make sure that you're back testing at the time, at the right current time. A lot of times you'll back test on a time that doesn't align with where you live, and then you wonder why you're missing a setup. You wonder why you are not profitable. Is because maybe you're trading at the wrong time, or your chart is not aligned with the time zone that you're in. So you're basing your analysis off the wrong time. So maybe your analysis itself as a strategy is super successful and it's really, really good. And it's really, really good. But yet now when you get onto a chart and you're trying to line things up, you just start losing. So make sure you guys' charts are aligned with the time zone that you're in. So now you have an accurate indication of, okay, what time does something happen? And it's accurate to the time zone that you live in. So that's a very big deal. So make sure you guys pay attention to that. So let's dive in a little bit more. Okay, let's dive a little bit more into TradingView. Let's get into some actual marking of the charts. So today's focus today, guys, I really want to help us identify trends. Now, because sometimes we have to train our eyes to know what kind of trend we are actually in. So the cool way, a really, really good way to understand what kind of trend you guys is in, bro, just get rid of the candlesticks. Go ahead and get yourself a line chart. Okay, go ahead and get yourself a line chart. Get rid of the noise, get rid of the candlesticks, get rid of all the wicks, get yourself a line chart. It's going to be a lot more favorable that way. Now, a tool that you guys can utilize is something that, a way that I teach my students when it comes to understanding, where you are in the market, how things work. A cool thing you guys can do on a line chart is just find really low points, right? Find really low points and find high points. Just go around the chart and start marking things up. I'm not telling you have to be accurate. We're not talking about accuracy. We're training our eyes. We're training our eyes to recognize trends. One of the hardest things that people have to do is that they want to mark up, they want to do all this fancy stuff. Train your eyes to recognize a trend. Train your eyes to do so. So a good thing that I do with my guys, or that, where I learned how to trade, is my mentor did this. I said, okay, Aaron, what direction are these circles going? Up. Then that means you're in an uptrend. It might blow your mind to think, okay, no, that's dumb, but there's higher highs and higher lows. Yes, there are technical terms for this. But for the beginner trader, you need to understand this. You need to train your eyes just to see if you're going up, down, or sideways. So using the circle tool is really, really cool, because now if I ask you, okay, what direction is this going? Up or down? You'll have confidence in saying that it's going to go up. And the line chart is also really, really good as well, because the lines, there's no wicks involved, there's no candlesticks involved. The line chart, for you guys didn't know, the line chart is actually the average of the candlesticks that are going through it. Okay. So for this, you're in an uptrend. What if we find another pair? Right? What if you find another pair? Well, let's look at US oil, for example. For this one, do we know if we're in an uptrend or a downtrend? Well, go ahead and grab your circles. Start, marking them up. Find a high point, find a low point. Find a high point, find high points, find low points in the market. And now what you can do, you don't even have to mark up the whole thing, but get you a total of roughly like 4 to 5 circles. Give yourself the opportunity to actually see where trend is going. And so for this one, we're in a downtrend. Okay, so for this one, for oil, we are in a downtrend at the time being. So now when you guys are talking about, marking off higher highs and higher lows, if you're able to understand, certain trends and stuff, what's really cool? Mark off the circles on the line chart of like your highs and your lows like this. Find a way to mark them. And I'm going to show you guys something really cool. So especially for my beginner traders who are just trying to understand, chart markups and stuff like that, how to get good at it. Then you switch to your candlesticks here and watch how almost accurate you are on your higher highs and higher lows inside the market with these circles down to the candlestick. And once again, is it perfect? No. But what it does, it at least gives your eye something to look at, right? You know how, fellas, how we see a fine girl, we like, dang, she's some eye candy. Or ladies, you be like, you look at it, look at a guy, man, he fine. Why? Because you enjoy what you're looking at. You like what you're looking at. You trained your eyes enough to know what you want to see. So do that in trading as well. Give it the same energy. Let the circles give you an indication of at least some kind of market direction, and then switch to your candlestick chart. And then I don't care what you do from here. Now you can go in and be like, okay, that's really the high right there. Okay, now let me go down to the wick. Let me get really precise. I want to get sniper entries. That's fine. But if you're beginning off, you might not need to worry about sniper entries. You just need to learn about recognizing patterns. Sometimes the reason why trading becomes so hard is because people want to become so perfect at trading, they fail to recognize that the market, like any kind of market, all they do is move in rhythmic patterns. They move in rhythmic patterns, and all you have to do is train your eyes to see the pattern in the market. Train your eyes to see the patterns, and you'll be so surprised how easy more strategy becomes, because then you can, well, we'll talk about that on Wednesday. But anyway, so that's, first thing, make sure you know how to identify a trend. Get really good at practicing that. Or another technique you can do, connect the dots. Grab yourself your little brush tool and draw a line between your dots. What color is the line that you drew between the dots? Oh, they're going down. Ladies and gentlemen, you just find yourself a downtrend. Right? So with that being, ooh, I took my microphone out. Yikes. Cool. Now, like with that being said, now you have an opportunity to really understand the market, market direction. So that's really cool. Now, a cool thing about, let's get into the basics of, honestly, let's get into the basics of support and resistance, as a final topic for today. I've been giving you guys a lot of good info on just the basic of the charts and stuff like that, but I don't want to rush your growth. I want you guys to be able to receive the information and actually gather it and practice. So let's talk about, finding levels of support and resistance really quickly. And then we'll get into how to find them a little bit better tomorrow, for sure, especially when we get into the chart markup session. But so we talked about candlesticks so far. We talked about candlesticks, what they are, what they do. We didn't talk about the anatomy of one, which I'm going to do it today. So we'll do support resistance tomorrow, but let's talk about the candlesticks today. So let's talk about a candlestick for a second. Let's get into a little bit of the nitty gritty of one. And let's make this red. Let's fill this in. Let's get the opacity all the way to full. And now you got yourself a nice little red candlestick there. And then let's go ahead and add a wick. So let's create the letter I to make this red. And then we can copy it and paste it. Great. We'll take this, we'll make it bigger. Boom. And let's make this bigger. And boom. And so now I'm going to mark off different levels with my horizontal ray tool here. Let's thin this out. Let's make this black. And I'm going to use my horizontal ray to mark off different levels of the candlestick here, so you guys can take notes, take screenshots as a way for you to practice at home. So you have that there, and then we'll close that out, and then we'll go to the bottom, and then we'll go to the very, very bottom. Let's take our zoom in tool and let's zoom in. Okay, so this is our candlestick, right? I know the eyes are a little bit different. That's fine. I know it's not perfect. Bear with me. I'm just trying to give you guys a candlestick that you guys can utilize to mark off. So you know how we marked off? We marked off the high point. So we marked off these different highs in different areas. So in a red candlestick, a bearish candlestick, what does that mean? Bear means price is going down. A visual way for you to understand what a bear is, or what a bear is. You know how bears are on all fours, and when they're walking around, but when they're about to attack on a fish, or they're going to prey on a fish, or they're going to attack somebody, what do? They stand up with their paws up, and then they claw downward for their prey. Imagine the red candlestick opens up high, but closes downward. So when you guys are like, so watch this, when you're labeling up different lines here, we put text, the very highest point of a red candlestick down to the wick is called the high point. We'll make this the top and left. That is the high, okay? The high is the highest point of the red candlestick. The level right below that is now we're going to start getting into the body of the candlestick. This is actually where price opened, okay? This is where price of this candlestick opened, especially if you're selling. So this is going to be your open. We'll make this top and left. This big rectangular piece is called the body. Not really much to dive into the body of the candlestick, but we'll talk about that a little bit more into the boot camp there. So you have the body, then you have the top, left. This is the body of the candle. And when the candlestick is red, the bottom of it, you guys can probably already assume in the back of your mind, this is called the close. Where did price close for the day, or for the hour, or for the minute, or for the month? This is called the close. Now in here, you go top and then left. And then the very, very, very bottom, when you have a wick, something like that, for the sake of this example, where you leave a little bit of gap, this is called your low. Okay, this is called your low point. And remember, I want you guys to keep hearing the word fluctuation. Fluctuation. Now, why would I want you to really, really, really understand the word fluctuation? Because you're going to find moments in the market where you'll have a candlestick that's really, really, really big with tiny wicks. You're going to run into a candlestick with a super, super, super tiny body, but really big wicks with different high points and low points. Just because a candlestick reaches a high point doesn't mean it's going to close at a high point. It's not always going to do that. So let's use a live candlestick as an example of that. Let's look at this. So let's pay attention to this candlestick right here. Notice how let's do this candlestick because we're talking about sellers. Let's pay attention to this candlestick right here. Do you guys see this really, really long wick, but then the body of the candle is kind of smaller, and then there's really no bottom one, or even this one here, really tiny body, but a huge wick? What a wick is telling you, ladies and gentlemen, is that the market at some point in the formation of this candlestick, price did reach this point at one point. But it doesn't mean that it closed at this point at one point. It closed down here. But during this hour, the highest that oil went in the hour was 80.11. But at the end of that hour, it closed at 79.60. So you want to be very conscientious of the fact of how these wicks are being formed. Just because you have a long wick doesn't mean that it's going to, close in a favor that you want. And we'll talk about closure and stuff tomorrow. But like this right here, you have a super tiny body with a big long wick, but it closed here. Even on a bearish candlestick, when price closed, right, the lowest was 74.49, but by the time the hour was over, price only closed at 79.55. And another tidbit that you guys want to pay attention to, and we'll see if we can zoom in on this a little bit harder. Just a tidbit. Do you guys notice something on these candlesticks? Notice how when the previous candle, let's make this arrow a little smaller. There we go. Notice how when this candlestick closes, that is the exact same area, maybe a little bit different, The next candle will open at the same price that it was closed at. It's just like, go back into the sneaker store analogy. The store had a sneaker at $2,400. Then it closed at $2,500. And let's say you missed the opportunity and you try to go to the sneaker store the next day. They'll start the opening price for those sneakers at $2,500. And now you're like, oh my God, but I have friends who bought it at $2,400. I had friends who bought it at $1,900. Ladies and gentlemen, welcome to the world of investing. It's just like that. It's just like that, especially with a candlestick, right? These candlesticks are representing to you, once again, the visual representation, but it's telling you what's happening. So the moment that this red candlestick closed, the next candlestick opened. Now, here's the thing about it is, let's say if we went back in time, a lot of times we don't know what color these candlesticks are actually going to close until they're done. So don't be afraid of the fact of like, oh, I don't know which way it's going to close. It's okay. Have patience. Allow the time frame to finish and then see what the candlestick decides. The market itself is usually never wrong. So you can always rely on this to give you correct data information if you do it correctly. So that's the bearish candlestick. Those are the sells. Let's talk about the buys. Let's talk about the buy candlesticks. The only thing I'm going to switch here is the colors. Yeah, there should be a way to click it. There we go. Let's just change the color of this. Let's just flip the thing to green. Now we're talking about bullish candles. Same ideology. Okay, same idea, but just a smidge different when it comes to green candlesticks. Just a smidge different, but not by much. The only really thing you have to change when it comes to the difference between a bullish candle and a bearish candle is you just have to switch the positions of the open and close. To switch the positions. Now you have the same 5 points of a candlestick just like that. It's like, I'm gonna be honest, this is how I learned it. It was like, remember the song Head, Shoulders, Knees, and Toes? You sung it as a kid. Man, I remember kind of learning this ideal from the song Head and Shoulders, Knees, and Toes. I'd be like, high, close, body open, high, close, body open, closed in the body and the open and the low. Like, I just made it fun. Like, make trading fun, man. That's how I learned. Like, I used music to make this make sense, and now I can mark up a candlestick pretty easily. So it's a cool little way. It's a cool, fun, different way to go about it, right? So utilize it like that. So that's the anatomy of these candlesticks, man. And so sometimes you'll have sometimes the high and the close are the same. So for an example, just like this candlestick all the way up here, notice how there wasn't a wick on the bottom side. So that means when price closed, that was the lowest that candlestick was going to go for the hour. So you're going to run into that. And then, of course, you guys see your bearish candles just like this. So notice this. Notice how the red candle closed with the low, but then the green candle opened at the bottom and closed above. So you get to see that kind of symbiotic relationship between these candlesticks up and down the chart. And yes, I use symbiotic. It's a good word to use, but it's that unity that the market has, especially between the two. Because eventually when you guys dive into like things like smart money and ICT and different strategies like that, you definitely want to understand your candlesticks really, really well, because those strategies utilize these candlesticks pretty well, and they don't use indicators. So you want to be able to know your candlesticks as well as possible. All right. So I appreciate you guys for tonight. I didn't want to hold you guys too long, especially with a conversation like this. There's a lot of information, but like I said, this is very beginner friendly. We have 3 days to break this stuff down. So this is just day 1 of our chart basics, man. We just went over, candlestick analogies, a basic way for you guys to train your eyes to see what trend you're in, whether it's going up, draw some circles where they're going down. And if it's sideways and you see your circles that are going sideways, then you're sitting in a term called consolidation. You're trading sideways. So tomorrow's boot camp will dive into actually buying and selling and marking off support and resistance and trend lines. And then also then on Thursday Wednesday we'll go into the strategy a little bit deeper. So I appreciate you guys for tonight. Thank you for an amazing day 2 of our amazing free 7-day boot camp. So see you guys tomorrow, same time, same place, 9 p.m. Eastern Standard Time. We'll talk next time. Love you all. Peace.